Happy New Year and welcome to another S&P 500 analysis. 2020 was a strange year for all of us. That's why we all need to appreciate the little things in life. I definitely appreciate all of you that have supported my channel and helped me grow the channel last year. And I am looking forward to expand my channel in the new year by posting more frequently and post more video on a variety of things related to trading, in addition to the market videos such as this one. In this S&P 500 analysis, we'll analyze the S&P 500 and ask ourselves, are we serious on expecting a crash coming soon for the S&P 500 and the rest of the market? We will review the market sentiment and the market internal to see what they are telling us, and are they telling us a market crash is near. And near the end of this video, I will share with you on the sector that I will be watching for 2021 and why I believe the sector could do well in 2021. Stay tuned. Let's do a quick recap on the S&P 500 on a yearly basis. As you can see, from the end of 2019 to end of 2020, the S&P 500 gained over 500 points. It gained 525.29 or 16.26%. And on this monthly chart, just looking on the month of December, for the month of December, it gained 134.44 points, or 3.71%. And on a weekly basis, the S&P 500 gained 53 points, or 1.43%. And you can see that the 10-week and also the 40-week moving average are still trending up, and the price is still remain above this long-term megaphone channel, and it has resumed one-time framing up. So the trend on a weekly basis is still up. Now, before we analyze the S&P 500 and other major market indexes, let's go and take a look at the sentiment and the market internal and see what they are telling us. Looking at this chart on the VIX is remain to be cautious, sitting near the lower region of the 20 and 30 zone. And it closed at 22.75. And the put-call ratio is creeping up a bit and closed the year at 0.61. So it still remains on the risk-on side of things. And the New York Stock Exchange up-down volume ratio is on the low side as the S&P 500 made a new closing high. And that could due to a holiday season. And the daily advance decline also on the low side, but the advancer did lead a decliner. It ended with 615 more advancer than decliners. And the New York Stock Exchange new high, new low came down a bit, but still above 100. It ended the year with 143 more new 52-week highs than 52-week low. And the New York Stock Exchange cumulative advance decline line made a new high, along with the S&P 500 closing at a new high. In the NASDAQ market, we're seeing a bit of divergence on both sides. We saw a positive divergence on Thursday from the up-down volume ratio and the daily advance decline. And on Friday, we saw a negative divergence from these two internal. And this could be a sign of developing a rotation within the NASDAQ market. So we just have to be a little bit cautious on that. Just kind of beware that there is a little bit of a mixed message. And the new high, new low in the NASDAQ market is still positive. It has 180 more new highs than new low. And the NASDAQ cumulative advance decline line is showing a negative divergence, so be cautious. From the market sentiment and the internal, aside from a negative divergence from the NASDAQ cumulative advance decline line, all of them are still indicating there could be more new high to come. Now let's go and analyze the S&P 500 and the other major market indexes and see where they are headed in the near term. Before we go take a look at the individual indexes, let's take a look at this composite chart here that I have all the major market indexes, and you can see that I have this arrow pointing at the last all-time high that these indexes have put in. So you can see on the New York Stock Exchange composite, it put in a new high on Friday, the end of the year, and so did the Dow Jones Industrial and the S&P 500 and the NASDAQ 100. But now the indexes that did not make new closing high on Friday or at the end of the year were the Dow Jones Transportation, the NASDAQ Composite, and also the Russell 2000. But all in all, we still have three different markets that make new high, and more importantly, the New York Stock Exchange Composite, because that is the collective of all 3,000 plus stock traded in the stock exchange that made up this index. So when that index made new high, that showed there is a broad market participation in pushing this market into new high. And as you can see from this chart, we have multiple indexes made new high, and that shows strength in the market. Until we start seeing fewer and fewer indexes making new high, then start looking for potential market top and major correction to occur. But until then, just focus on the trend and on the strength of the market. And right now, it is still pointing that the market will go to a higher level. Now let's look at the S&P 500 on this daily chart here. We can see that the S&P 500 was able to stay above this 3720. This is the 127 extension. And we basically still looking for this thing to move toward the 3800 and possibly get up to this major move to this 3901. And also that is in confluence with this 141 extension near the 3891 level. So right now the market overall is still looking to a higher level. And if it does pull back again, we'd be looking at this 3720 as the first level of potential support. And if it dipped below that, then we could see this gap get filled and possibly come down to this trend line here. And worst case is probably get down to this 3645 area and retest this pivot high once again. We see that there has been tests at this level numerous times, and we was able to hold that level. So that is a critical support level. If it breaks below that, then we could see it to come back down to these levels at the 3588 and 3549 area. But in the meantime, we'll continue to look for a push higher into the 3800 level. And here on the NASDAQ, we see the NASDAQ also continue to push higher and close at a new closing high last Friday. Remember, we're still looking for the NASDAQ 100 to come up to this 13,000 level. But if it does, decide to pull back, then once again, we'd be looking at this 12,439 support level as the first level of support. Then if we break that, then we'll be looking at 12,204. But in the meantime, we're essentially still watching for a move toward this major move here. And that is the major move of this particular triangle. And we're basically projecting this the height of this triangle up, and the 618 is 13,515. And for the Dow Jones Industrial, we see the Dow Jones Industrial still hugging this upper trend line of this price channel. Remember, we're still waiting for a breakout from this channel. Then we essentially will be projecting a major move based on this bull flag that we're looking at. And if it were to break out, let's say, for example, on Monday, when the market opened back up, then we're basically looking at these projected move here, these major move, somewhere up at the 32,160 for the 618. So we're still looking for the first level or the first potential target around this 31,000 round number. And once it get above that, then we will be watching for it to make its way up to the 618 area. And then on the downside, and we're basically looking for this thing to come back down to the bottom of this channel and possibly get down to this 29,795 area for potential test of support. And if break this channel, then we're essentially looking for this 29,199. And for the Dow Jones Transportation, we see the Dow Jones Transportation is kind of pulling back and testing this 12,379 and trying its darnest to hold above that. So we got to keep an eye on this level. If it breaks this level, then look for it to come down to this 12,000 area, 12,096, and possibly test this bottom of this price channel and also filling this gap here. So that's the key level to watch. And if it could bounce off of the 12,379, then we'd be looking for this thing to make its way back up and try to target this 13,000 level. And finally, for the Russell 2000, you see the Russell 2000, remember we were talking about in the midweek video that it came up to this upper trend line of this channel and it's pulling back a bit. So right now, we're essentially looking for the possibility of come back down and test this 1935 area for support and see could it get a bounce back up, then break this channel and get up to the 2100. But if it breaks below this if it breaks below this 1935, then we basically gonna look for these Fibonacci retracement zone level to be in play, and that would be at the 382. The level at 382 would be 1835.20. So the key level to watch right now is 1935.30. If it breaks below that, then we look for the 1835.20 for the next possible test of support. And now let me go and tell you about the sector that I will be focusing on in 2021. Now here are the sector I will be focusing on for 2021. These sectors are a play on the end of the pandemic and the reopening of the U.S. economy, and also the changing of the guards in Washington, D.C. For the reopening of the U.S. economy and the end of the pandemic, I see the leisure and the traveling sector will benefit the most in 2021. The cruise line, airline, casino stock will likely see their stock price regain some of their losses due to the pandemic. Some of the names from these categories are Carnival Cruise, Norwegian Cruise Line, Delta Airline, United Airline, Alaska Airline, JetBlue, Southwest Airline, and for the casino, Wynn Resort, Las Vegas Sands, and MGM. And for the change of the guard in D.C., especially when the Democrats gain control of the Senate, I see an acceleration in federal legalization of the cannabis industry in 2021, and that will set off a speculation fever on this sector. Some of the stock in this sector I will be watching in 2021 are Tilray, Canopy Growth Corporation, Chrono Group, Aurora Cannabis, and Althea. And I believe Althea is in talk with Tilray in trying to combine or merge together. So that will be a iffy one, but it's still on my watch list. So these are my focus sector for the new year. And on the side, I'd be selectively looking at some of the energy stocks as well. And I will post video on my analysis for these stock in the near future. So be sure to subscribe if you're not a subscriber of this channel yet, and click that notification icon so you won't miss any video from me in the future. In summary, the S&P 500 and the stock market are not at the verge of a major crash based on the internals until we start seeing fewer and fewer markets making new high and a deterioration of the internal. We should not be seriously looking for a crash. Wait for the sign from the market. If there is a spike down due to some emotional reaction to some unexpected news item, that could be a buy the dip opportunity if a top hasn't been made. Be sure to smash that thumbs up to help me promote and share this video on YouTube, and help me grow this channel by subscribing to this channel if you're not a subscriber. Thank you for watching and stay safe.